Hong Kong's Dairy Farm International DFI, which operates a chain of hypermarkets and supermarkets under the Giant, Mercato and Giant Mini brands, is exiting its grocery business in Malaysia. DFI operates the retail chain under GCH Retail Malaysia. According to sources, it is believed to have been sold for at least a couple of billions of ringgit to a group of Malaysians led by Dato' Andrew Lim Tat Keong. Lim is the group executive chairman of KL Sogo and sits on the board of Penang's Gamma Supermarket and Departmental Store. GCH Retail in Malaysia is 70% owned by DFI and 30% by Negeri Sembilan royalty-linked Syarikat Pesaka Antah. It is unclear if the sale includes DFI's Singapore business. GCH has aggressively shut stores in Malaysia since 2019, bringing the total number to less than half by 2021. In 2018, it operated some 122 stores. The company was in the red from 2013 and returned to the black in 2020, posting 12.23 million ringgit in net profit. The retailer, however, slipped back into the red in FY21 with a net loss of 106.17 million ringgit. It is yet to file its financial results for FY22. Petronas President and Group Chief Executive Officer Datuk Tengku Muhammad Taufik Tengku Aziz says the listing of the national energy giant is the prerogative of the government as its shareholder. But serious deliberation is needed as it involves national interests and the entire oil and gas ecosystem. According to Bernama, he said there are pertinent implications that go beyond dividends or fiscal, as there are 150,000 people employed within this industry apart from those within its own workforce. Tengku Muhammad Taufik noted that the timing may seem advantageous for the listing due to elevated oil prices. Addressing a lawmaker's remark on the exercise being the impetus for more transparency and corporate governance, he said the inference is that Petronas does not pursue best practices nor follow international disclosures. He stressed that Petronas' accounts were in compliance with the IFRS standards and audited as well as accredited by the Big Four accounting firms. He pointed out that Petronas is also scrutinized by local and international credit rating agencies and is notched against sovereign ratings. Tengku Muhammad Taufik also brushed off the notion that profits will be elevated by the proposed listing to above 60 billion ringgit and also shot down allegations that it hit about 20 billion to 30 billion ringgit in profit, reminding all quarters that this is a highly cyclical market. Petronas Chemicals Group or PetChem booked a 76% fall in fourth quarter FY22 net profit, in line with lower earnings before interest, tax, depreciation and amortization or EBITDA, unrealized forex loss and lower profit contributions from its joint venture and associates. Its quarterly earnings stood at 481 million ringgit. Revenue meanwhile rose 25% to 8.7 billion ringgit on the back of improved sales volume, a stronger US dollar and a higher contribution from the specialties segment. For FY22, net profit fell 14% to 6.3 billion ringgit due to lower plant utilization of 89% versus the previous year's 93%. Revenue rose 26% to 28.9 billion ringgit, boosted by, among others, revenue contributions from the recently acquired specialty chemicals subsidiary Perstorp Holdings. It announced a second interim dividend of 16 cents. Looking ahead, MD and CEO Muhammad Yusri Muhammad Yusof said the reopening of China and the easing of its COVID-19 policy are positive for the chemicals sector. Still, the group remains cautious as prices of petrochemical products will continue to fluctuate. It expects the first half of 2023 to be challenging as it continues to face slow demand and higher costs due to inflation, particularly for its business in Europe and the US. PetChem's shares closed 4.88% lower at 7 ringgit 80 cent, valuing it at 62.4 billion ringgit. Axiata Group is planning 7.1 billion ringgit worth of capex in 2023 from 6.6 billion ringgit last year, with a major chunk of the investment going into the expansion of its Indonesian venture and its tower business. During its financial results briefing today, Joint Acting Group CEO Vivek Sood said a large part of the capex will be skewed towards the broadband business as well as the mobile business in Indonesia. The second largest part of the capex is for the tower business. As for the Celcom-Digi merger, the group intends to keep both the Digi and Celcom brands in the market for now. In the fourth quarter of FY22, Axiata recorded a core net profit of 219.5 million ringgit from 103.9 million ringgit. But the latest quarter saw a massive 4.15 billion ringgit goodwill impairment across its mobile operations in Nepal, Indonesia and Sri Lanka, compared with 338.44 million the year before. Quarterly net profit, however, came in at 9.97 billion ringgit from 116.02 million ringgit, as it recorded a one-off gain of 13.5 billion ringgit from the Celcom disposal as part of the merger. Quarterly revenue increased by 9.34% to 5.83 billion ringgit. The group declared a second dividend of 5 cents per share. For the full year, annual net profit stood at 9.77 billion ringgit from 881.9 million ringgit in FY21, while revenue also rose, climbing 8.66% to 21.73 billion ringgit. Axiata's shares closed 0.64% higher to 3 ringgit 15 cent, giving it a market capitalization of 28.91 billion ringgit. AmBank Holdings or AmBank saw third quarter FY23 net profit jump 12% to 452.6 million ringgit on the back of higher interest income. Quarterly revenue rose 4% to 1.23 billion ringgit as it recorded higher interest income of 1.33 billion ringgit. AmBank did not declare any dividend for the latest quarter. AmBank Group CEO Datuk Sulaiman Muhammad Tahir said in a statement, the group has delivered resilient results with sustained growth in profit and income. Amid the macroeconomic headwinds, the lender's key divisions performed well, underpinned by solid loan growth and net interest margin expansion. He said the group will continue to be nimble and strive to further strengthen its service quality and delivery for all its customers, while standing ready to capitalize on growth opportunities this year. AmBank's shares dipped 0.26% to 3 ringgit 83 at the close, for a market capitalization of 12.69 billion ringgit.